Thank you for joining me. I'm Alex, and I want to talk about Dunkin today. So they used to be Dunkin' Donuts, but they kind of sort of rebranded a little bit. And what they do is they make coffee, also donuts, I hear. So obviously one of the major competitors to Starbucks, and they kind of try to get into the same kind of business model with good coffee, but also regular coffee, and donuts is what they still do. Current price $63.20, which gives the market cap of $5.2 billion. Dividend is 0. Don't expect that to change in any time frame that I care about. Revenue $1.4 billion, slightly up. Earnings $242 million, also slightly up, which gives them a PE of 22 and a forward PE of 26. Obviously, forward PE higher than the current PE is kind of a problem, especially for me, and especially when it's such a significant change. But more on that later. Total assets $3.9 billion, total liabilities $4.5 billion, which give them a total stockholders' equity of negative $700 million. And obviously, I'm not really a fan of negative balance sheets, especially when that's, 3 times their earnings and half of their revenue. Huge red flag here. So earnings not growing in the coming year, revenue not growing very much. The balance sheet is just terrible, and there's no dividend. And so, as one of the major competitors to Starbucks, I say definitely don't buy this, especially at the current time, and especially without knowing what the impact of the current situation is. So, no growth for a growth investor, marginal. No dividend for a dividend investor, and no balance sheet for a value investor. So, don't buy, I guess. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.